Hey everybody, this is Jim at SP500chart.com. It's about 4:30 in the afternoon on February 3rd, 2014, and we saw one of the ugliest days in a while. And if you were looking at the weekend video, there was a pattern that looked a bit ambiguous, but we were in that consolidation range, and today we saw that break down. And I'll talk a little bit about that, and also I believe some important trend lines that need to hold up. We're also going to take a look at some other indexes because, for example, the Dow Industrials looks a little bit different than the S&P, and we're also going to look at the NASDAQ. Try to put this in a broader context. But before I can do that, I need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I remind you, I'm still not a licensed financial professional. Hey, and today that felt very true. Just seeing everything just get hammered. But I am a guy who will continue to draw lines on charts. So let's take a look. Okay, the first thing we're doing here is we're looking at a 3-day chart. And the reason is pretty simple. Is simply the fact that we are now getting closer and closer to this, what I believe would be a very important support line. If this breaks, it doesn't mean that we plunge like we did immediately in 2008. But if it breaks, it could mean that we are setting up something like what took place in late 2007. Could be. Okay, so if this breaks, it could be kind of analogous, check that, it could be similar to what we saw happen back here. And that is a break, but then a bounce, then a new low set, which really kind of signaled the culmination of this top back in 2007. By the way, that top took the better part of a year to form. So let's go back to the 3-day chart. Here is what I believe is a very important trend line. If this breaks, then I think we are certainly headed back to test 1600. And there's a possibility that this trend line right here could have some say in the matter. And I remind you that we've got 1, 2, 3 touches on this line. We have this little area here that got underneath it. And that line just also happens to be almost exactly parallel to the line created by these two tops that we did not quite reach. So that would mean, if you look at this, that this could end up being a rather large, legitimate rising wedge. Now I'll remind you that there is still room in this wedge for money to be made. So I'm not saying that if we come down here that's gonna break. But if it does, then I would be prepared to kiss this 5-year run potentially goodbye. And again, that's not saying it is going to end, but at that point that would absolutely be, I believe, a shot across the bow that if 1600 doesn't hold this thing up, then we may be in deep weeds. So, of course, we're 140 points above that, so what's there to worry about, right? Well, looking at a daily chart, and again, I apologize for all of the clutter on here. We were looking at a couple of things. One, at one point, we had this turquoise line that we said wasn't perfect because it was a little fuzzy. That guy is now busted. No question about it. With what took place today, the S&P down 40 points, this guy is taken out. So this line now will have switched to resistance. Additionally, our red line that we'd been kind of bouncing around on, you see right here, there it is. Let me slide this over a bit. Here's our red rising line. We were bouncing around on that, very close to this turquoise, and it looked like, gee, maybe we reverse here and we come up to this level, at which point, over the weekend video, I mentioned that we could be forming a head and shoulders top here. And this would be the neckline. Well, there's part two of the bad news. Because we are underneath what would have been a neckline for a head and shoulders top. Now, I didn't mention the possibility of this being a right shoulder and over the weekend video, and I think I was remiss in not mentioning that. But when you look back on every head and shoulders top that we had here, even here, we had really pretty well formed patterns, and all of a sudden we get one that essentially has has a fairly complex left shoulder, a head that had a double top, and then almost nothing for a right shoulder. So where did we end the day? Well, as luck would have it, let me go back to the daily chart. I think it's going to be easier to see on this. I mentioned that there is a chance that we could bounce on this line right here. And the reason I mention that is the fact that we do have two points of contact with this line that both met with a strong bounce. Okay? And we closed right on that line. So here's what I think. Either we bounce tomorrow and at least come back up to backtest this neckline. And I'm going to call it a neckline right now because I think we have to respect the legitimacy of a 2.25% move down, even though we didn't ever get our right shoulder. But if this line produces a bounce, then we're going to have some resistance right up in what area is that? Why is that not showing it to me? Right about 1770. I would expect some resistance. And if that doesn't give resistance, then I think more than likely this rising red line would. So it's not looking real swoofed right now for the S&P. If this behaves as a head and shoulders top, then we will have a target now of about 1695, which is still about 46 points, 47 points lower than where we are right now. So if this line gives way, then I would say, yes, we've got a head and shoulders top here, and we, even though it's got a funky right shoulder, where have we seen that before, but only in the inverted variety. So if we break this line right here, then I think we are on our way to under 1700, and we haven't been there since October. So that would be I think that would be a pretty important technical turn of events, because that also sets us up to test this rising blue line that I believe is going to be, if it breaks, likely, if you will, the first shot across the bow to be looking now in terms of the formation of a more significant and even a potentially major top that would turn the markets down for an extended period of time. Again, if we break this line, I'm not saying that is the signal, but I am comfortable, very comfortable in saying that if we break this line, then I would be looking for the formation, the potential formation of a topping pattern. And it could, and more than likely, if it is a major top, it would probably have a neckline that would be sufficient to take us down also through this red line right here. So let's just keep an eye on it. If we look at a 5-minute chart, just if you look at it and you get away from the larger pattern, and by the way, before I do this, I'm going to kind of scrub most of these lines. It's interesting to note that we did bounce on this one right here, but this was interesting while it seemed to work. And by the way, this was the past 6 days, does end up being on our chart as a diamond. I haven't seen very many of those. I'm going to get rid of most of these lines here. We're going to get rid of this one. And before I post the chart, I'll tell you what, I'm going to change the color on this diamond because that's an interesting pattern. Okay, I made these dark brown so they stand out a little better. The measurement from a diamond pattern would be the height of the pattern from the spot of the breakdown, which happened today, and we've already made the target from that. Okay, just to point that out. But if this is acting as the right shoulder of an even larger pattern, which would act as a head and shoulders top, then today's breakdown, if we go through this line right here, I would be looking for a move under 1700 to the low 1790s. But let's take a look, because you don't always get there in one fell swoop. Let's take a look at what the 5-minute chart looked like. What's interesting to note here is this really sort of looks like the selling is starting to run out of steam a little bit, because we've got I'll leave that is our diamond target. Here's our head and shoulders target. But as you take a look, it just looks like it's not really a wedge, but it's almost like a cross between a wedge and with a little bit of a rounding shape to it. So it wouldn't surprise me if we at least get a bounce here on this this line that we really tagged and ended just very, very close to. So guys, ugly day. Like I said, I think the best thing to do here is watch these important support lines. This is kind of speculative. I think it may provide a bounce, but again, it's on the chart because not because it has a tremendous amount of history, but only because we got 2 touches here and it extends on out. We haven't touched that line since the early to mid part of October. So let's see. Maybe we bounce there. Maybe this is a channel. Maybe this is not a head and shoulders top with a funny right shoulder. But I would watch this line really closely. If this breaks, then I think the 1700 1690s are definitely in play, and even as low as tagging this blue line right here, which needs to hold a support, or that is definitely a shot across the bow. Now let's quickly take a look at the Dow Industrials. Okay, what we're looking at here again is a 3-day chart. This is the line that is analogous to the S&P line that I just talked about. I'll tell you what, I'll make it blue so that we're kind of comparing apples to apples. You can see that today the Dow closed slightly underneath that line. That doesn't look too good. In the Dow from this point, if that is a legitimate break of that line, then you may get some support down here around horizontal support around where is that? 14,720, 14,700, let's call it 14,700. If we don't bounce. So that is really kind of a nasty looking situation, if you ask me. Zooming out on the Dow, you saw that red line that turned the Dow back. There it is, right here, and just not a real happy looking chart right now. On the maybe positive side is the fact that if this does break down, the market may find some support at this all-time high. Well, at what used to be the all-time high mark around 14,200, but that's currently about 1,100 points underneath where we are right now. Not a good-looking situation, and again, the Dow is in another large rising wedge. However, as we look at the NASDAQ composite, let me fine-tune this just a little bit. There we go. Look, nowhere near that line. I mean, not real far from it, but the line is currently at about 3670, and the NASDAQ closed just a little under 4,000. So it's a real interesting situation to see what's performing and what's not, what looks really to be hanging on a cliff, and what appears to be, well, just maybe this is a normal kind of a pullback thing. So, guys, this is really interesting. And I mentioned in the weekly review video over the weekend that maybe we see something this week to bring a little clarity to the picture. And, it wasn't the kind of clarity I was looking for, but it is what it is. So we are now on alert for a potential development of a topping pattern if we see one or two more support levels give way. Now, I remind you, when the support level breaks, there's often a pullback. So, I don't know that if we see that line break, I don't know that I would personally sell at that point, or whether I would wait for a return to that line that would likely be higher and be a better exit point than where it might potentially break. So, guys, thanks for watching the video. Rotten day. Let's just keep our eyes on it, and if there's anything you see that I'm missing, shoot me an email. It's chartist at sp500chart.com. I want to hear from you if you see something I'm missing. Thanks. Take care.